Well guys, we have a very special video today. I have been joined by 4 other UK investors and we are each going to be covering one of our favourite stocks to buy right here, right now. Now all of these guys have their own channels as well, so be sure to go and check them out. Links are in the description below. And please remember, we are not financial advisors, so if you are planning on investing into the stock market, always do your own research first. So without further ado, let's get into it. So up first we have Josh, aka the Dividend Bloodhound.
Hey guys, it's Josh from the Dividend Bloodhound Investing channel here. A huge thank you to Trading with CJ for hosting me on his channel today. I'm going to be bringing you one of my all-time favourite dividend stocks from right here in the UK in this video for your enjoyment. Hope you like it. That company is Unilever, ticker ULVR, and a share price of approximately £45 at the moment. This company is steeped in dividend history. It has been paying a growing dividend for well over 20 years. It yields a nice 3% at the moment, a sustainable one at that. The company is extremely resistant to the current global pandemic and is still doing extremely well, with revenue of over £50 billion. The 5-year, 10-year and 15-year compound annual growth rate is 6%, 7% and 6% respectively. So this company grows for you just like clockwork, and that is exactly what I'm looking for when I pick a dividend paying, income paying stock for my portfolio. Just to give you a quick taster of some of the brands that it owns as well, it owns Ben & Jerry's, Hellmann's Mayonnaise, Coleman's Mustard, Domestos, Lipton Iced Tea, PG Tips Tea, amongst many others. You will find a Unilever product in your home, of that I have no doubt, and that is exactly why this company is one of my favourite companies in the short time that I've got available. It's really right up there to pay you income, whether the sun is shining, whether it's not, no matter what the stock market is doing, no matter what the world is doing, this company will continue to pay you, and that is exactly why it's one of the larger positions in my portfolio. Thanks again to Trading with CJ for hosting me. It'd be absolutely great to see you on my channel, Dividend Bloodhound Investing. Maybe see you there.
A big dividend stock there, definitely one to have on your radar. Now the UK is not known for having too many growth stocks, but Jacob from JKR Investing is going to bring you one of his favourites.
Hi everyone, hope you're doing well. My name's Jacob, I'm from the channel JKR Investing, and I'd just like to say thank you to Trading with CJ for asking me to come on and join this special video episode that he is doing, and congratulations on 1,000 subscribers. My pick for this video episode is called Boohoo, and I'm sure you guys probably have heard of it, and it's a stock that I'm well known for on my channel. Now if you have been living under a rock, it is an online fashion retailer. It goes under the ticker symbol BOO, and it's currently trading around about £2.87 as of recording this video. It has been on a 30% drop since about June, and that's when it hit its all-time highs, and there's been a bit of news that's caused this stock to go down, but I think this could be a fantastic buying opportunity to get a great company at cheap prices with a lot of upside when you factor in the revenue growth and the profit growth this company is going to have. Now this company is a massive growing company, growing revenue at a fantastic rate, growing profit at a fantastic rate, and with that profit and that revenue growth, it's going to probably lead to the share price going up in the next few years. And the great thing as well is that we're not really blessed in the UK with amazing growth companies. So to have a growth company like this at a massive discount is definitely something to be checking out. As well as its amazing growth, it has a fantastic balance sheet, and there's zero debt on this balance sheet. It just paid off the last bit of debt it had on the balance sheet. That has now gone. It also sits on 344 million in cash, which is a nice cash reserve which will help the company expand. We also have a lot of insiders buying this company, which is a really positive sign. When you see management buying own shares of the company, I think is a really positive sign. And Boohoo's recent earnings were absolutely amazing. They absolutely smashed numbers out of the park. Fantastic growth, and one of the big standout things was the US growth. The US growth in the last earnings report grew 83%. So as well as picking up a very dominant UK company, we're also looking at a company now that's looking to expand past the UK, go worldwide, looking to enter the US, which is a massive market, which could really pay off for it. And like I say, when it got 83% growth in the last earnings report, I think that was absolutely amazing. Now I do have a lot of full detailed videos into this company on my channel, but I hope you found that information useful, and thanks for having me.
So it's been a very strange old year for Boohoo, and I think many people out there, myself included, have taken some very nice gains from them. So we've had dividends, we've had growth, and now over to Emmanuel Finance, who's going to give us one that right now could be considered more of a value stock.
What's going on, investors? My name is Emmanuel, and my favorite and largest UK stock position right now, without a doubt, is Bae Systems PLC, and the ticker symbol is BAES.L. Now, this company, in my opinion, was hammered, absolutely hammered unfairly in September, and it was trading at its pretty much at its March lows of £4.30 just a few weeks ago, which I thought at the time was insane. It was absolutely mental, considering prior to the Rona, this was a £6-7 stock. So I felt it was trading at a massive discount at the time, with a ton of upside potential way ahead of it. So I decided to load up and make it my largest UK position in my portfolio. And so far, that move has actually really paid off, because we recently cracked £5 a share. So we're sitting on some nice juicy gains at the moment. But who are BAE Systems? And I personally would like to call them like the UK's answer to America's Lockheed Martin, because they're pretty much within the same industry, which is the aerospace and defense. And Bae Systems currently operate through 5 main channels, which are the electronic systems, the cyber security and intelligence. They also operate through platforms and services, air, and maritime. And I actually have gone into detail regarding these on my channel. But another thing I did cover on my channel was that they recently won multiple contracts from the US Army, just as recent as the 3rd of November. And that particular contract was for them to help develop key technologies to advance their team demonstration program. And that contract actually was worth $9 million. But even prior to that contract, BAE also was awarded another contract from the US Army, and that one was to help them to develop a design for unmanned aerial vehicles, so essentially high-tech drones. Now, this contract was worth $400 million, which I felt when I read that would sit really nicely in BAE's income statement. And also, when I read through their most recent financial reports, the management did conclude that the defense side to the UK business industry was pretty much back to operating at normal levels of activity. And therefore, I just felt this was a steal at these prices. So I do think that BAE Systems right now is the best, safest, and most undervalued UK stock to buy right now. Plus, they also have a juicy dividends that they pay out. So that's why they are my favorite and also my largest position. And that's why they're giving me some juicy gains right now. So definitely check them out if you haven't already. And also you can go on my channel. I have done the top 5 UK valued stocks and BAE Systems. I do go into a lot more detail there. So thank you so much for watching. Peace.
So it's looking like a very good value stock in an interesting sector. And speaking of sectors, one that springs to mind when we think stock market is technology. So over to Alex from Marzell Money, who's going to be giving us one of his favourite UK technology stocks.
What's going on, guys? Alex here from Marzell Money. Thank you so much, CJ, for having me on. The choice I've made is one of my favourite UK stocks because it's a hybrid stock, brilliant value. They pay a great dividend, and I believe there's a lot of growth potential there as well. The stock I'm talking about is Money Supermarket Group. For those that don't know what Money Supermarket do, they help consumers save money, which is brilliant because whether we're in a recession or good financial times, everybody wants to save money. So that could be on credit cards, bills, travel, it could be on broadband, mobile, gas, energy. I'd consider them a mid-cap stock. They have a current market capitalization of 1.4 billion, annual revenues of 372 million, and that has been growing year upon year, the revenue and the profits. You can see Money Supermarket's current share price. You can see on my screen here, it's about £2.67 at time of recording anyway per share. You'll see the stock price here over the last few years, it hasn't done much. There was some big growth initially, but in the last couple of years, the stock price has come down quite a bit. It's mainly due to them paying down their debt, but they're in a really good cash position now. The balance sheet's looking really healthy, and I just believe the stock represents brilliant value for money. Just to touch on some of the financials, they have a PE ratio of just under 17, which is below the average for software, IT, e-commerce, which is situated at about 20. On the dividend front, just over 4% dividend currently, a really nice dividend, which has consistently grown for about 10 years. Dividend per share growth I've got noted here is about 8% per year, so it's nice to see that not only do they pay a great dividend, it's increasing year on year as their profits have done also. Money Supermarket have very little debt. It's a really great buy and hold. I do love talking about growth stocks as well, but when it comes down to dividend stocks, Money Supermarket I just love because there is that growth potential. Once again, CJ, thanks for having me on. If you guys enjoyed my stock tip, please smash the like button. Smash the like button for CJ putting this together, and anyone that wants to subscribe to my channel, feel free. Marzell Money. Thanks.
It is definitely one that we don't hear many people talking about, and it has gone under the radar. So up last is my pick, and it's in a completely different sector again, and I'm looking at UK house builders. It was hard to pick between two different ones here, but I have gone for Taylor Wimpey. So Taylor Wimpey has a market cap of £6.1 billion, and over the last 3 years it has been a little bit up and down. However, thanks to the crash this year, it dropped down to less than £1 per share. It has recovered somewhat, but we are still down 28% from those 52-week highs of £2.36 per share. So 28%, that is still quite a lot of growth potential there just to get back to those pre-crash levels. It has a PE ratio of 13.7, which is quite low compared to the industry and market. The market is just over 20, and the industry, more importantly, is just over 17. So you are getting very good value for money here with Taylor Wimpey, and a much better price to earnings ratio. And if we look at its future growth potential, in the next 1 to 3 years, it's predicted to have 33% on annual earnings. It is still making a profit. We did see that profit get reduced a little bit this year. However, we are still making an 11.9% profit margin right there, which we will happily take. And it's in a very good financial position. You know, it owns a lot of different houses. We can see here the assets compared to the liabilities is absolutely ridiculous. And it has a very small amount of debt. Just 2.8% debt to equity ratio, which works out to be about £100 million. And if we look at its balance sheet, that's 100 million sitting on its debt to assets. However, we have 600 million in cash and short-term investments. So if it wanted to pay off that tiny amount of debt, it could easily do that by 6 times, which we will happily take. Another great thing about Taylor Wimpey is it was a very high dividend payer. Okay, it was paying a 4% dividend yield. That has obviously been cut this year. However, we would expect a company like this to reinstate that in the future, hopefully within the next year, or at least a percentage of that. And the last thing I really do love about this actually is insiders have been buying this company. In the last 3 to 6 months, lots of insiders have been buying. Over 1 million shares have been bought, and £745,000 worth of shares was bought by none other than the CEO of the company, which shows if the CEO is buying shares in this company, it is great for an investor as they clearly have faith in their company. So there we are. We have covered tech, growth, dividend, value, UK stocks. A massive shout out and thank you to my fellow YouTubers and investors for joining in on this video. Links to their channels are in the description below, so be sure to check them all out. They all cover a wide range of stocks from the US and from the UK as well. Thank you guys, and let me know down below in the comments what your favourite UK stock is, or if you're from the US or elsewhere watching this, just let us know in general what your favourite stock you hold is. Thanks for watching, and as always, if you could smash the like button and subscribe to my channel if you haven't done so already, that is of course greatly appreciated. Until next time.